With a show of hands, how many of you out there are, I guess, in a situation to where maybe where you're struggling or you are kind of beat down, torn down to the fact to where you're really wanting to find something else in your life that you can do that basically you can become your own boss, your own employer, where you don't have to live by the rat race every day, waking up at 6, 7 in the morning, have to report to work at 8, getting off at 5, 6 o'clock in the evening, and then going home doing the same thing. And it's like living Groundhog Day every single day. I hear that so much for so many different people, and life shouldn't be that way. We should have the opportunity. If we have freedom, we want to be able to be happy and be free in life in general, having peace. And in today's time, economically in the society, things are getting tougher for people. People aren't able to afford certain things. And as the things surrounding us continue to go up, it crunches down on individuals in their, when it comes to their families and their pockets, not being able to provide as much, not being able to just simply do as much because our money no longer goes as far as it used to. Okay. This is probably this is probably a topic for a whole different title, but today I want to really just share with any individual out there, and if that is you, share, show a show of hands out there if you are in a position or place right now to where you really want to find something else to do with your life because you're getting burnt out, or maybe whatever you were doing before you were happy with for the last 10, 15 years or 20 years, but maybe you're no longer as happy, and you want to find something else to do to kind of refresh your life in a sense. So I want to show you just using the candlestick charts. Just if you're someone that's interested in converting over or shifting over to day trading, futures may be a great opportunity. I know there are other assets out there that you can trade, Forex, options, but futures trading is very straightforward. There's not a lot of science or hard work that you really need to put into it, meaning a lot of tons of research. I mean, you can really do this turnkey in a sense of learning a specific strategy, but you got to understand the cores and concepts and basics of trading. And that's why I always kind of, hit home at and talk about market structure, because it's extremely important. So if you don't get anything out of this video today other than listen to that one term and do your research and understand and learn how to read the charts correctly, market structure is where everything starts at when it comes to these candlestick charts, because these candles represent something. They represent buying and selling pressure and power within the market, the market pushing to the upside or to the downside. And we have to be able to look at these charts to understand which way the market is actually flowing. That's where market structure and price action comes into play. Market structure is just the market, showing its hands. Is it making higher highs, where it's breaking above, prior or recent highs, or is it doing the same thing and opposite of when it's moving to the downside, making lower lows and lower highs? You have to understand which way the market is flowing to be able to understand which way to trade. Simply put, understand that, put that down. Understanding which way the market is moving to understand which way you really need to trade. That's why one thing you want to master is market structure. I'm here to share with you today, especially moving into the last quarter into the year. We're getting ready to, within less than 3 months, round out 2025 and move into 2026. And I just want to share with anyone out there that has hopes and dreams of doing something else with their life and becoming their own boss, meaning their own employer, being able to live by your standards and not by anyone else's, being able to build a dream for you and your family that no one else can take away from, and being in control of your own driver's seat as far as how much do you really want to make on the day. Okay. Now, structure is so important, okay, on these charts. We see the candles, right? If we look at the market and you see the market just making constantly higher highs and higher lows where it looks like it's channeling completely to the upside, it can shift at any point. Now, don't get me wrong. I mean, the market could be very bullish, and then we get to a bearish cycle for a little bit, and then maybe it goes back up and it breaks. This is a major high, this is a major low, and it breaks that area of structure. Let me tell you, if you're struggling with understanding and depicting an overall direction as far as which way you should trade, if you see the market making higher highs and higher lows to the upside, where it's just in a bullish momentum push to the upside, a trend, and then it dips down to the downside, right? And we start making lows, lower highs, lower lows, lower highs to the downside, okay? That means it went from cycling to the upside to now it's cycling to the downside. So mark up the last point of the last high that it made. That's going to be your major high before the Yeah, but before the market started swinging down and making lows, lower highs, coming down, mark off that last area that it topped out and made its first high. Okay, we're following the candlesticks to give us a depiction of which way the market is actually moving, so we can look to trade in that direction. Now, I always tell people, if you struggle to trade in the in between, what does that mean? That means where the market's made its last high on a bullish cycle or trend to the upside, but now we got where it's making lower lows and lower highs. The final push to the upside is going to be your major high. The final push where it starts making lower lows and lower highs to the downside is going to be your major low. When we start moving in between a leg, okay, that means the extreme of a high or the extreme of a low, be very careful and be patient, all right? Not saying that you can't trade the in between, but the best opportunities come when the market shows its hand. If it's moving bullish and now it's coming bearish to the downside, allow for it to either take out the major low, okay, meaning it made its final low and maybe it started pushing back, making higher highs and higher lows to the upside. So now we got this major low. So think about this. If the market is higher highs, higher lows to the higher highs, higher lows to the upside, the last push to the upside before it starts making lower lows and lower highs to the downside, that's your major high, okay? And then the last low that it makes before it starts making higher highs and higher lows back to the upside, that's your major low. So allow for the market to take out either the major high or the major low. And it could be a waiting game. It could be a period of time before it does it. But I can almost assure you each time that it does that, when it does, look for a pullback to a key area to where the market will, like right here, it broke this major high right here, for example. This was the major high, this was the major low, okay? I would wait for the market to take out that major high, that major low, and then look for a pullback. Like right here where it made this high, I know it's kind of hard to see here because this is a few days worth of price action activity, but let me move this down and maybe you can see a little bit better, blow it up. Right here was where the market took out that major high right there. It kept pushing to the upside. It took out that major high right there, and this is a pullback to a small area of demand. That's what we're trading, supply and demand, and we're looking for opportunity to go long because the market is now bullish back to the upside. It took out a major high, and then when it comes back and it reacts and rejects off of this demand area that broke above this major high, then we can look to continue going long to the upside. So when you're in between a leg, a major high and a major low, look for the market to take out the extreme high or the extreme low and look to take a trade going off of that. So let's say the market started making higher highs and higher lows back to the upside after coming, and we've got this, that final pivot point to where we got a major low, lows, lower highs, lows, lower highs, low, okay? That's our major low that we can mark up once it starts making higher highs and higher lows back to the upside. So we're in between here and here. If it came down and broke below this low and took out this major low, then I would be looking for the market to do, let's say this was a low, lower high. Now we're breaking a major low. Pull back to some key area of supply instead of demand because supply is aggressive selling. So we were taking out the major low to continue to move to the downside, going south. Now, I'll say this right now. On higher base charts, yes, that time in which this could happen could be, could take some time to do so because we're looking at a higher range chart. You can actually scale down to a lower range chart, okay? Or maybe you trade time-based charts. Looking at the candlestick charts and trade the same and similar way. So when the market makes, say, if it's pushing to the upside on a leg going, let's say, for example, let's just take a look here on a lower chart here. This is my 24 range chart because this is what I trade, on my entry chart. Let's find where the market was pushing to the upside, okay? Let's see here. Like right here, this is 182, 25,182. This was yesterday's price action. This is that leg right here to the upside, right there. So let's say the market was bullish to the upside, higher highs, higher lows, made its final, push to the upside before it started making lows, lower highs, lower lows, lower highs to the downside, right? So that we can go ahead and mark off this area right here as our higher high. As our major high. As it's making its lower lows and lower highs to the downside, at some point it's going to start turning back around and start make higher highs and higher lows back to the upside. So we can mark this to be our what? Our major low. So we're in between two structure points, a major high and a major low. Now, if it goes up here and takes out this major high, before breaking the major low, then I would look for an opportunity for where the market could pull back to a key area of demand to continue going higher. If it makes its major low here, where it's making and turns around, starts making higher highs and higher lows, back to the upside, meaning pushing back up, okay, then I can make this or mark this off as my major low. If the market comes down here and breaks below this major low right here, then I'll look for a pullback. So if I blow this up a little bit, we probably can see, hopefully, not to say it's going to happen every single time, but this is a major low below this point here. Higher highs, higher lows, higher highs, higher lows. Okay, major low. We're in between two things now, major high and a major low. So as the market starts coming down, this is my major low. Always think of major structure points that once the market takes it out, look for something on a pullback or retracement to go in a continuation going short. It takes out the major low right here, okay? And this is a pullback right here to a key area. Could be a pullback to a key area of supply, into which we can continue taking the market to the downside as it right here. Now in this case here, it actually broke slightly above the supply area here. It wicked it out, so it grabbed some more so like a liquidity grab or sweep, and then it went to the downside. But just imagine being able to get into this trade right here somewhere around 25,025 and taking it on down here to 24,000, say 90, 94 or 95 right there. You can pick yourself up some nice points, and this is directly taking it from a lower range chart, okay? So then let's see, did the market go back up here and take out the major high? So now at this point that has broken that major low and continued to the downside, now this becomes our major low. Now it does eventually go up there into, let's see here, yesterday's trading session. So this was Thursday's, this was Friday's trading session right here. And it broke that major high before the opening session. It broke it during probably during the Asian, pretty much, actually before London, okay? And so it breaks the major high. So what we would potentially be looking for is an area for the market to pull back to a key area, and it did right here. You can see it. This is the major high. Again, it's probably kind of harder to see because it's a lot of price action here. That's the major high. It comes up right here, wicks out above that, it closes above it right there, and comes back to this small area of demand right here, okay? This is the area right here that broke above that major high right there. So you can look for, because it's taking out something major, a pullback to a key area of demand to continue going to the upside, okay? But you also just have to be mindful of what's above you, because we're approaching a round number up here, which the market ended up touching there. So you can look for major structural points to be taken out, major highs or major lows. And now that this is now a major high, the market started to do what? Making lower lows, lower highs, lower lows, lower highs to the downside. So now we can mark this as our major low, and then we can find our next point, which would be our major low, which would be right here, because now we started making higher highs, higher lows, higher highs. So as long as we're making more new highs back to the upside, we can mark this as our major low. So either way, if it comes down and takes out the major low or takes out the major high, take it out at major pivot point or area structure. We can look for, okay, it breaks the major low, comes down, let's say it does, right here, breaks the major low or below these lows right here, look for a pullback to continuation to go short. If it comes out here before that and takes out the major high, then I can look for a break of that area of that pivot point structure there, which is that major high, and then look for a pullback to continue going long. We're just looking for major structure points to continue in the same direction where major structure points like major highs and major lows are taken out, all right, either to the upside or to the downside. You can do this just simply using a naked chart. I know I got a lot going on my charts because there's a lot of markups that I, throughout the sessions that I mark up as far as supply and demand zones. But this is a basic, simple way of being able to, either waiting patiently or scaling down to a lower base chart to find, maybe sooner setups or quicker setups to which you can trade once the market takes out those major structural points. Definitely when it comes to, looking at the candlestick charts, you don't need indicators, you don't need experience at all. It's just what you want to do is just spend time on the charts, back testing and forward testing, just structural point breaks, okay? And now you can trade in between. Again, trading supply and demand is universal, and there can be multiple areas of opportunities that you can actually trade. Like right here, I'll just show you some examples right quick before I jump off. Even though this is our major high and this is our major low, guess what? Right here on the downside, where the market started coming lower, making lows, lower highs, and lower lows, it broke below this low right here. So once the market starts taking out lows, to the downside, makes a low, lower high, breaking structure, takes out this low right here. This is a supply zone. Pullbacks are key areas of supply. Supply is aggressive selling and demand is aggressive buying. Like right here, this is a demand zone. Again, we're in between a major structure point, a major high and a major low. But if we look here, the market does what? Makes highs, higher lows, highs, higher lows, and makes a new high here. And then it comes down and breaks below this area here. So now we got a small high. We got a high right here that hasn't been taken out yet. And the market goes up and breaks and makes a new high. Okay, so now it's made a new high on the move to the upside here when it broke above this area of structure, and this is aggressive buying. Okay, so as the market was at this high was being approached to be taken out, it makes high, higher low, and break structure higher, breaking above this area right here. Okay, high, higher low, higher high, breaking above here and here. Guess what? This is a key area of demand. That we can, look to go long off of because it's aggressive buying. You can see it. And there's what's classified as high probability and low probability. I'll talk about that in lots of videos. So please watch that content. But all that is the imbalance or gap resting back at the actual supply or demand zone. Like right here, you see those in-between lines right there, that arrow, top arrow, the bottom arrow. That represents or marks a imbalance back at the actual zone. Same thing here. That's this area here between these two little arrows right here. There's an imbalance on that candle right there, that bullish candle. All right. I'll talk more about that in plenty of videos. So please, you can find pretty much any topic that you want to kind of research or have you want to query. You could go over to the homepage, use the magnifying glass or two on the homepage, and type in the topic and it'll bring up some video content for you to watch, okay? But yeah, I just want to share that with you guys today, that if you are having a hard time or struggling which way to actually trade, and you don't have much experience when it comes to actually trading, always look for the market to take out a major high or major low, and that's going to give you an opportunity to look for an opportunity or look for a way to be able to trade in that same direction. We've got bullish momentum to the upside, last high that it made before it started making these lower lows and lower highs, look for it to be ran to the upside, or when it starts making these lower lows and lower highs to the downside, like I said, and then starts to turn back around, making higher highs and higher lows, you're in between something, a major high and a major low. So look for the market to either take out the extreme low or the extreme high, and then look for a pullback to go to an area of supply to go short, or breaks the major high, pull back to go from an area of demand to go to the upside to go long. It's very simple. It just all comes with understanding and following the structure of the market so that you can identify key points of, say, zones or levels, supply and demand, and what you can trade moving in the same direction with the overall market direction, okay? That's all it is. It's a quick way to be able to master the markets without having much experience. And, you could do this, okay? You got a couple months to get this under your belts, 3 months. You can spend time on the charts, October, November, throughout December, and be rocking and rolling by January in 2026, the new year, to really start, making some extra money, or maybe thinking about, transitioning over and starting a little side business for yourself, day trading the future markets, okay? But that's all I have, guys. I wanted to talk about that today and just bring that to the forefront of anyone's mind out there who's doing their research right now, to more so, have an interest in trading the futures and just kind of figuring out, saying, hey, how do you trade futures? What's it about? What are some markets to trade from? What do I need? The tools that I need to really look, what's important? Okay, what are the concepts? Market structure. Master that. If not anything else, master that and find a solid strategy to trade. Now, when it comes to strategies, I talk about how I personally trade using a simple multi-chart confluence strategy, using a higher base chart, marking up my zones that way, but also using that as a means of, from a top-down analysis standpoint. And then I mark up my zones off my higher range chart, but then I'll move down and scale down to a lower range chart to find entry points, okay? Because I want to take my chart from a more refined standpoint, or kind of point of view when it comes to taking entries. I don't want to take my trades off of, larger charts, because I know the drawdown can be incurred. I can get into a trade, once the market rejects an area, but then it comes back, it could come back against you, even though it may not stop you out, but you can incur some major drawdown before the market moves. I like to be in trades where the market is got momentum pushing behind it and, falling through pretty quick. So I use a top-down analysis called multi-chart confluence, marking up zones off of my higher base, 120 range chart from trading the NASDAQ, and then scaling down to my 24 range chart when it comes to trading or looking for opportunities to trade on the lower range chart. But again, I'm really looking for the most confluence that I can possibly have to be able to take a trade in the direction nine times out of 10 when the market in the direction of the market. If you want to learn more about that, then you may want to become either an elite or an ultra elite supporter of the channel. It's a private community. You can become a member for just pennies on the dollar a day, to be honest with you. If you click the link down in the description portion of the video, it's titled Ultra Elite Supporter. Click on that. You will find what will happen is a couple of tiers will pop up, okay? You'll see the elite, you'll see the ultra elite. Click on each one of them, and you'll see the perks and rewards that you receive. With the elite membership, you receive all my trade breakdown videos, where I break down trade after trade after trade after trade. These are trades that I post over on our Discord community. Yes, we have a Discord. The link is down in the description. Then what I'll do is I'll go back, the trades that I posted there, I'll go back and break them down for the private community so that, in detail too, so that you can understand what I was thinking, why I took that trade, why I put my stop loss where I put it at, why I put the position I was aiming for certain profit or target areas as well. Just giving you a rundown of my mindset in reference to why I took each one of those trades. There's tons of those videos there, okay? Those are the educational points, I believe, that people really need to see. Okay? I believe strongly in video content because video content lasts forever, as long as it's up and posted, right? But it lasts because you can stop, go back, fast forward, rewind, go back to another day and watch it all over again. So that's why I create the video content, which is something that has helped so many people out that are part of the actual Discord community, okay? But you also receive the video playlist and a great video covering market structure, okay? For anyone that is interested in becoming an elite member. If you're interested in becoming an ultra elite, you receive everything I just discussed, plus, you also receive my live recorded trading sessions as well, okay? All right, so once you click that ultra elite supporter link down in the description, you'll see the tiers pop up. The choice is yours, which one you want to actually join, okay? And thank you for everyone out there that supports the channel who is an elite or an ultra elite supporter of the community today, okay? Thank you for supporting my efforts as not only as a trader, but as a content creator just as well. Now, if you are not a subscriber and you have not clicked that sub button yet, make sure to do so by clicking the subscribe button down below. And as soon as you do that, click the bell next to it so that you do not miss any of the uploaded content. That is the post notification, all right? Make sure just as well to share by clicking the share button with individuals that you may know, with your own personal community or with your family or friends, okay? I definitely greatly appreciate it. Now, if you haven't also clicked that like button, okay, right now, and you found value in today's video or any value in any video on the channel, please make sure to drop me a like or a thumbs up on this actual video right here. Take care. I'll see everyone in the next video and have a blessed weekend.